Crypto is like a deck of trading cards. People trade both cards in crypto hoping to buy low, sell high, or hold on to something that might skyrocket in value later. The community vibe is similar too. Enthusiasts geeking out over the latest drop, whether it's a new token launch or a rare holographic card. But Bitcoin seems to hold real tangible value, a digital asset that appeared from the shadows, a decentralized currency that was once a niche and now heading to be a reserve currency for the United States. Being that it is decentralized, it doesn't operate the same way banks do. Think of banks as spreadsheets keeping track of who's paid what to who. But the catch is each bank keeps a separate record from the other. So one bank's records are not shared to the next, meaning only a specific bank holds that set of records. But with Bitcoin, there is only one enormous spreadsheet that keeps track of all transactions. This is called a ledger. The advantage of this is that everyone who takes part in this crypto has a copy of that ledger. When a transaction is processed, every single copy of that exact ledger is updated. This is a chain of blocks all linked together. Each block's hash is based on its own data and the hash of the previous block, making it nearly impossible to alter past records without breaking the chain, making the blockchain tamper-resistant and transparent. Bitcoin is not only secure but is looked at as an investment. An interesting thing to look at when viewing this as an investment is its halving cycle. This cycle has a strong correlation with its price, and also deals with the blocks we spoke about before. Bitcoin operates on a fixed supply cap of 21 million coins. New Bitcoins are created as rewards for miners who validate transactions and secure the network by solving complex cryptographic blocks, proof of work. The initial reward miners received was 50 Bitcoin per block solved. The halving events are triggered every 210,000 blocks, and when this happens, the reward drops by 50%. This will happen until around 2140, when the reward will be next to nothing, and eventually hitting the 21 million cap. Why this matters? Halvings slows the rate of new Bitcoin entering circulation, causing this model to be deflationary compared to fiat currencies. This also impacts the price of Bitcoin. With reduced supply growth, paired with steady or increased demand, prices drive higher. But why is this investment to some and secure technology to others still so speculative and obscure? Bitcoin was invented by an individual or group using the pseudonym Satoshi Nakamoto. Satoshi Nakamoto published the Bitcoin white paper titled Bitcoin, a peer-to-peer electronic cash system, on October 31st, 2008, via a cryptography mailing list. In January 2009, they released the first Bitcoin software and mined the Genesis block, marking the birth of the cryptocurrency. Satoshi communicated with early developers and enthusiasts through emails and forums until late 2010, after which they vanished from public view. No verifiable personal details, name, nationality, or background were ever confirmed. Estimates suggest Satoshi mined around 1 million Bitcoins in the early days, a stash worth billions today, yet those coins have largely remained untouched, adding to the enigma. Satoshi chose to remain anonymous from the start, using a fake name and taking steps to obscure their digital footprint, using privacy tools like Tor. If you've enjoyed this content, like and subscribe to XDCG and stay tuned for more.